Hey guys, Stock Saturday, and it's a slightly underperforming week for me. For once, I've had fair few good weeks, so this was kind of inevitable. Nothing huge. I'm down 1%, about 17,000. So on a this sort of size portfolio, that's not a huge amount. But the S&P is up 1.52%. Got to new all-time highs, just into the 6,800s, and sort of dropped back down slightly under it at the end of the day, but nothing sort of too much. Still looking incredible, really. And Nasdaq 1.47%, so ever so slightly worse. Again, so 25,400, and sort of just continuing to be an extremely straight line upwards broadly. So there you go. Tech stocks all looking good, and the S&P is sort of being largely driven by sort of your Mag 7 names, but I think it is broadening out a little bit. Looking at some quick bits of news, got Hive Digital, obviously still a fairly large position for me, and sort of my crypto moon bet, if you like, for the rest of the year and sort of a little bit of January as well, given that I've sold pretty much all of my IREN. But yeah, Hive are sort of now looking at expanding again next year, or continuing to expand, really. They're expanding right now. They're saying 35 exahash in 2026. They've signed another 100 megawatt hydroelectric deal in Paraguay, and a 5x growth in HPC and AI operations. So they're sort of continuing their partnerships. Bell Canada. So the AI revenue is pretty good. They sort of were saying, I think, 100 million annually in AI revenue before, and this sort of would 5x what they're currently doing, I think, would take them to near that. So it's really sort of reiterating a target that they already had. I think they initially may have sort of said they wanted to get to that this year. That was a bit too ambitious a target, but yeah, I think this would still probably lead to me wanting to get out. 35 exahash sort of next year, I expect, on Bitcoin mining is not going to be that much. They're at sort of 15 joule, or 17, I think, joules per terahash by the end of this year, and they've been testing new machines for quite a while now that are apparently 5 joules per terahash. So, very, very quickly, Hive's efficiency is going to be back to being very, very low again, or poor rather, and you'll get some sort of IREN-like player suddenly ramp up 50, 100 exahash with the new 5 joule machines. So it's just, Bitcoin mining is not going to be for profit companies, I don't think, long term. So yeah, one to I still think get out of, but at the right time. Hopefully we have a nice Bitcoin run sort of into the end of the year. And sort of speaking of IREN, I just thought this was a bit strange and interesting to highlight that it does look like IREN have just given up. Well, could be a one-off, but somewhat given up on the monthly updates. We got September the 8th, their update for August, and we're now the 25th of October, and there's no September update. So they seem to be the only miner sort of all the ones that I follow that haven't done a September update. They've been doing all of their announcements of convertible debt and that sort of thing, and talking an awful lot about AI stuff and AI revenue, but yeah, not reporting on Bitcoin mined and everything, which is still the vast majority of their revenue. I kind of think they should, and wasn't all that impressed that they haven't done an update, but they're doing, full year results, or Q1 financial year results, on November the 6th. That, of course, won't include everything, so yeah, not ideal. But getting into some earnings, as I'm sort of fast becoming a more stock-focused portfolio than crypto and gold. So Taiwan Semiconductor, one of the first to report generally. Things sort of very much similar to last quarter and the quarter before, really. Things looking very positive. Cash increasing quite significantly, over 100 million new Taiwan dollars, so that's very good. Marketable instruments as well increasing, so total cash and short-term investments looking very, very healthy. And property, plant and equipment had a huge increase this quarter, 3.38 to 3.5 trillion new Taiwan dollars, is that? Obviously a little bit crazy in Taiwan dollars, but 114 billion US dollars of PPE. So they are pressing on, I would think, with the Arizona fab and various others as well. And liabilities wise, cash dividends payable sort of increased a little because they're increasing their dividend, but the current portion of bonds payable decreased by 18 billion Taiwan dollars, and long term increased by 32. So slight increase in bonds, but obviously vastly dwarfed by the increase in cash. So very, very nice. We sort of guessed the balance sheet would be improving somewhat, so that's very, very good. And then the balance sheet is improving because of crazy good numbers. Revenue up sort of 55 billion Taiwan dollars. Cost of revenue sort of increased a little, but most of this sort of flowing through to increased profit. All looking good. Income from operations, I tend to sort of go all the way down to net income with them because they don't sort of hide very much. Not a lot gets lost in write-offs and strange things. They obviously have a net income on interest because they hold vastly more cash than debt. So there's no sort of cash flow from operations looking good, and then debt, interest taking it down, debt and interest income takes it up, and 45.6% net profit. So incredibly good. Just coming over to their presentation, they sort of give their numbers against guidance, and they were sort of somewhat cautious on the guidance. It looks like revenue above the top line estimate of 33 billion in US dollars, and gross margin 2% above the top end of their guidance, 59.5%. So extremely good. Operating margin over 3% above the top end of their guidance. Maybe this is a sort of a temporary boost. As we said, net profit of 45.7. They don't give a guidance figure for that. They only give operating margin. But sort of net profit is actually in the operating margin sort of estimate. So that's a bit unusual. And Q2 was only 42.7. Same sort of pretty much the same as third quarter last year. So I am sort of prepared for this to come back down somewhat, maybe. They've sort of been raising prices, but could have been just a one-off. Obviously shipments increasing, 3.3 million wafers up to 3.7 million in Q2 this year, and then 4.08 million this quarter. So there's a hell of a lot of volume going through for AI, it seems. Looking at the breakdown of process node this quarter, you would think again 3 nanometer and sort of the NVIDIA chips and everything would be driving the revenue, but that sort of red bar looks pretty much the same to me, and it's the 5 nanometer that is increasing. small increase in 7 nanometer as well, but yeah, 5 nanometer doing quite well. So that's a surprise. Growth rate by platform. So HPC not actually growing all that much, continuing to do well, of course, but it's smartphones that are given the strong revenue at the moment. Internet of Things is, only a 5% of revenue, so that growing by 20% doesn't make a huge difference. Automotive similarly 18%, but it's only 5% of revenue. And then, this is phones, but this is other consumer electronics other than smartphone. That's tiny slice, and then others only 2%. So it's HPC and smartphone largely that matters, with sort of automotive and Internet of Things potentially, in sort of 4 or 5 years being a little bit more of a proportion. But you sort of keep saying that every few years it will be in 5 years. Another big driver, sort of a bit like Tesla, constantly refreshing their 5-year targets. And they give guidance, sort of just incrementally higher revenue, sort of, the mid high point of this is this quarter's revenue. So they're saying not a huge amount of growth, and then gross margin 59 to 61%. That is really, really high. And operating profit 49 to 51%. So operating margin was 50.6% this quarter. So they're saying, yeah, slightly lower than that possibly. So could have been a slightly better than expected quarter for just one quarter, and then we come down to reality, or maybe they just keep beating their guidance. We'll have to see. No sort of recent major events, just paid a dividend. They sometimes have partnerships or acquisitions in that little bit. So yeah, very much just steady as she goes, going extremely well, basically. Not so much for Evolution, looking a bit worse for wear recently, sort of coming down their revenues. I think it's sort of been flagged that revenue wouldn't be quite so good, still having a lot of trouble in Asia with sort of cyber crime, which they say they are sort of increasing efforts to stop, but that all costs money. So costs are up and revenue is down. 507 million euros for the quarter, down 2.4% from this quarter last year. So not ideal. The first 9 months of the year is up 1.5%. So that's a little better, but not ideal. EBITDA down 18.9%. That's a bit strong. Adjusted EBITDA only down 5.3%. So yeah, there's always adjustments. And yeah, net profit down 23%. Not great. And below the 50% range. So they were 56.7% net profit this quarter last year, which is unbelievably good. Down to 49.8% this quarter, which is still extremely good, one of the highest, net profit companies in the world. But yeah, nobody likes to see things getting worse, of course. The first 9 months of the year, actually slightly lower than that, 48.7%. If you include Q4 last year, then it's 52%. That quarter was particularly good, but yeah, basically things looking a little bit rough. The CEO, as I say, sort of said profits and revenue aren't what they want them to be. I'm sure everyone would agree. Revenue development in Asia is very far from satisfactory. Cybercrime, they're taking steps towards that. Newly regulated Philippines, they're sort of pushing in, but it's quite a lot of harsh regulations, making it very volatile. And Europe is still looking to potentially put more regulations and tax and things. UK sort of talking about attacks on gambling companies. So yeah, it's running through treacle, sort of fighting a headwind, but as long as they're still making 50%, sort of 45%, it could go to 40% to be honest. That would still be market leading, and price may drop, but I think at some point the market is going to have priced in sort of poor performance basically. Still continuing to develop on their slot side. Certainly they've 110 new releases for the full year, and launching more real live games, ice fishing, their first ever speed game show. So yeah, the live obviously is still the vast majority of revenue, 431 million. It's obviously down from recent quarters, but I mean 446 this quarter last year, it's not down that much really. And RNG slot-based games are up 3 million from last year, so pretty good. Net revenue obviously down sort of quite a bit, 12 million. No one wants to see falling revenue at all, of course, so that's why the stock took a little bit of a hit, but I don't see it as too bad. I see this as a sort of temporary headwind, unless sort of regulation really starts clamping down hard on their sort of unregulated sector. I still see this as pretty strong. You sort of see the breakdown per region. Europe did actually achieve a quarter-on-quarter gain where they'd been dropping down quite a bit. Asia saw the bulk of the loss of revenue due to, they're saying, cybercrime and things is now below 200 million. North America saw a slight gain, and they've been gaining every quarter for the last year, so that's pretty good. Latin America grew as well, and other revenue grew from this quarter last year, but it's slightly lower than Q2 this year. And their share of the regulated markets increased to 46%. So basically the whole market is not doing that well, but Evolution are gaining a larger portion of, a slightly lower amount maybe. Their revenue on regulated markets did increase for the quarter, but yeah, basically governments don't exactly like the industry at all. And balance sheet wise, things still looking pretty strong. 656 million cash, down slightly from this quarter last year, down quite a bit from the end of last year as well. That was a sort of temporary bump in cash from the looks of it. And yeah, still, they don't really do debt because they don't need debt. So they just grow off the back of their own income, which is very, very nice. And, that cash that even covers sort of quite a bit of current liabilities. They have a huge sort of tax bill, as always, and then some other current liabilities. So, yeah, very, very nice balance sheet, basically. So I think a company in a temporary headwind, still think they can do well, even off, potential heavier regulation and tax. I'm sort of willing to bet that gambling becomes more widespread, especially in the US. They seem to be opening up to it, whether that means sort of more competition for Evolution, where at the moment they have quite a sort of dominant position. We don't know. We've got, DraftKings and sort of various other companies in the US, might become sort of competition, but Evolution seem to have a competitive advantage on the slots game, certainly, and an enormous amount of live exposure with these, Wheel of Fortune type games and things. Not something I would play, but there you go. People like them. The only reason for not increasing the position is I'm sort of not really buying individual stocks in Trading212 anymore, sort of as I mentioned, due to the FX fees, and Interactive Brokers doesn't seem to be particularly happy with the Swedish shares of Evolution. That just sort of was coming up not applicable, and sort of I kind of thought I always think if I'm allowed to buy the actual shares, as you sort of often can on interactive brokers, then why buy the ADR, which I've got in Trading212? So yeah, not quite sure what's going on there, but I've been buying other stuff. So portfolio wise, quite a bit of change. I've still got an enormous amount of cash. Obviously, this is largely set aside for tax purposes, and I just sort of keep it here. It does sort of distort the graph. I'm wondering whether to just, drop this down and pretend that it isn't there, basically, because like 220,000 or something of that is for a tax bill. I'm not quite sure I've actually accrued all of that just yet, but it's expected if I end up selling everything else that I want to sell sort of into the end of the year. So I'm just keeping it there in advance, basically. What I have done is sort of make this overall tab as well, which I'll sort of come to in a second. So I've been buying the ETFs that I wanted to buy, increasing the ones that I had been buying. I bought a Global X robotics and AI ETF because the Legal and General one doesn't do a distributing fund, so the Global X one is. It's not quite as good a fund as the Legal and General one, in my opinion, but yeah, needs must. I wanted a distributing one, so hopefully over time I can sort of get that into the ISA and buy the Legal and General one. Depending on if I still want to hold it then. More clean energy, more digital security, more small cap, etc., etc. Quite a lot more NASDAQ 100, and yeah, everything else sort of doing quite well. A lot of the semiconductors back to not quite all-time highs, but doing pretty well. On the ISA side, yeah, things looking pretty good. Bought some more S&P 400. Just decided to buy that in the ISA. Things are a little bit sort of all over the place. Bought some iShares Bitcoin and Wisdom Tree Ethereum, sort of with the idea of selling selling about this amount's worth of Bitcoin in the actual crypto portfolio, and then I can have some tax-free at least. I haven't actually sort of, maybe a little bit of a gamble, but I haven't actually sold the crypto itself. So yeah, I'm just a little bit sort of overweight at the moment. I might sort of sell that in the next week or two. Bitcoin has sort of risen up again a little bit, so I've sort of got a slight gain on that, having not made the sale yet. But yeah, the idea would be sell that and put that in the invest account and buy more ETFs, because I'm currently sort of way below where I want to be. But yeah, more sort of small cap and world small cap bits and pieces. The REITs are a little bit awkward, because I want the sort of REITs in an ISA, but I sort of want to be buying them on interactive brokers, and my ISA isn't particularly big over there, so not quite sure how I would do that. I don't think I can do a partial transfer of just these ETFs into interactive brokers. Might look into that, whether that would be possible. Because I don't really want to buy I do want to increase this ETF exposure, the REIT exposure, but yeah, I don't want to be buying them in 212 with that large FX fee, so it's a little bit annoying. And yeah, interactive brokers, ISA. So here, don't exactly have a huge amount of room to be buying REITs. I could sort of start thinking about selling Pan American Silver if this sort of starts going on another decent run. That would sort of be the idea. Pan American isn't exactly a long-term hold for me. So yeah, when I start getting out of my gold and silver exposure, could maybe buy some more REITs. And the interactive brokers invest account, sort of just fast becoming my main stocks account, of course. 360 odd thousand of individual stocks, because it is very, very cheap. And then the options are reducing down. So still got, haven't sold any Hive this week. Obviously they had quite a large hit off the back of Bitcoin not doing particularly well, and the miners just sort of seem to get hit really hard on, can't remember which day it was, sort of earlier this week. But they've sort of started to come back yesterday, and yeah, things are looking up a little. I did sell my Cipher mining, can't remember what they're called, because they had a very large spike up on the news that Jane Street, it seems, has taken a 5% stake in them, although they said that was passively. So whether that is just in indexes and they sort of have to report that they hold that, it's not that they're super bullish on Cipher mining. They've decided to do that. They called it a passive stake, so I kind of saw that as a non-news event. Pretty much all the miners were doing well yesterday, but Cipher was sort of up nearly 20% at one point, and I kind of thought they were at a bit of a premium valuation anyway, with sort of Bitcoin where it is. They have about the same exahash as Hive, and they're 5 times the market cap, I think. So yeah, just was looking a little bit frothy, and I wanted to be out of them. So I've got my Hive left, I've got my IREN left, and my Hive for a sort of potential moonshot crypto run, but we'll have to see. Kind of left Equinox as is, Kura Mining as is as well, but bought a little bit more B2 Gold. I bought some January 2028 $10 calls, so over 2 years to run on those. Very nice. And yeah, that was about it for the options. Sort of cash dwindling down here. And so I've made this overall tab, which is where I kind of wanted to be all the way along, because I wanted to sort of monitor how much the stocks are of the total portfolio against a sort of target weight. Now, obviously, these target weights are a little bit of a work in progress. I'm not sure whether I sort of want to be, much heavier on my sort of higher conviction stocks. Some people will have sort of 5%, 7, 8% maybe in their sort of higher conviction stocks, where I've sort of gone for more of a maybe an equal weight approach, not quite equal weight, 1.5%, and then sort of 3% in maybe higher conviction stocks. But we'll see. This sort of, as I say, a bit of a work in progress. Still got more to add to the portfolio when start selling more crypto. So we'll see. But sort of based on this, I've put some in, green and red, obviously, whether they're above or below the target weight, and some have no target weight, so they are just red, like Kura Mining. It's not a long-term hold. It's a hold for the gold and silver run, which, yeah, I wouldn't be holding forever. So that sort of stays red, basically, until I sell all of it. You got some others which are just above my target weight, like KGHM, but I'm not sort of actually going to be, rebalancing based on this. I'm not going to suddenly sell KGHM just because it's a little bit above a sort of arbitrary number. It's more just to give an indication of where I am and sort of what I should have been buying when when I was putting hundreds of thousands into the portfolio. But yeah, there you go. It's sort of an awful lot of holdings. Some of these will be going, of course. All these sort of reds here without a target weight: Hive, Himax, and Pan American Silver, people like that. Equinox. I wouldn't mind. I've kept Fresnillo here as a sort of permanent holding. Sort of thinking I want some silver exposure, maybe long term, because of that industrial use, where people like Equinox are gold only. So yeah, probably wouldn't hold that super long term. Undecided whether I want a gold allocation permanently in the portfolio. I sort of added up all of the options, and that sort of comes up to 18% at the moment, and kind of thought maybe I'll stick to maybe 5% as a sort of approximate target that I'm happy to go above, if the opportunity arises. But yeah, 5% of the total portfolio is sort of fun money, if you like, risk money to put into options. So yeah, I'm way above that, hoping to sort of trim some of these down when things start doing well. And yeah, the ETFs are sort of obviously way low from where I want to be at the moment. I sort of said I want to be around 40% ETFs going forward. So any money that comes in from crypto or selling options or selling gold and silver basically would largely go into increasing the ETFs. And I always said I would want a little bit of crypto exposure. I wouldn't sell out entirely. So why not sort of have it in the ETFs, tax free in the ISA if possible. So I've put sort of 4% say and 1% on these Bitcoin and Ethereum ETFs. If I can sort of have these in the ISA, sell out of my actual crypto, I trust sort of BlackRock and Larry Fink to hold it for me, especially being a BlackRock shareholder. And obviously cash is at 18% of the portfolio. It's not really, I should sort of ideally knock 300,000 off that as a sort of rough figure for tax, a new car, need some money for a new car, and moving house, which I'll need to put some money into. So yeah, that's really in terms of spare cash for the portfolio, not exactly a huge amount at the moment. Sort of put this 2% here. I'm not sure whether I always want to be 2% cash, but these are just sort of rough numbers to give me an idea of what a portfolio could look like. But interested in your thoughts going forward. I see the pie chart hasn't quite updated that, but yeah, still got some adjustments to make to the portfolio. I like to start seeing this sort of pie chart of where where things could be in the future taking place. Sort of technology and financials and things start being a more meaningful part of my portfolio. So we'll see going forward. But interested to know what you think of this this overall tab now, and sort of having a bit of options, quite a lot of ETFs and a bit of crypto and all sorts as a long-term portfolio. So leave your thoughts in the comments below and like and subscribe. See you soon.